Good day, everyone. Today we are just touching the basics. Again, we are busy with the journals, so I will be explaining in detail the cash receipt, the cash payment, as well as the petty cash journal. Of course, those are the major ones that we use for recording the transactions. So again, this presentation or this video was compiled by me as always. Okay. So the cash journals, we say that the cash book, receipts, payments, petty cash journal are the three journals bookkeepers and accountants use to record cash flows. The cash book receipts record cash inflows, and the cash book payments, petty cash journal, record cash outflows. The cash journals, it is essential for every business to record all inflows and outflows of cash via the business account. Traditionally, the cash book is divided into two sides, namely we have the cash book receipts as well as the cash book payments. Now, this is an example of a cash book. This is a cash book of a bank account, usually looks like a T account. So the cash book is divided into two. The other side shows you the payment side. The other side shows you the receiving side. So the debit side, that's where we receive our monies in the bank account, and the credit side, that's where we are making our payments. So a bank is an asset account. The balance of this account will increase on the debit side and will decrease on the credit side. So here we are defining cash transactions. We're saying that a cash transaction is a transaction which is settled at a point of sale, meaning that when we exchange goods, if we are exchanging items that I'm selling in my store and you are giving me cash, we are calling that a cash transaction. Then we have two main categories of cash transactions. We have cash receipts, we have cash payments. Cash receipts, it's when the business is receiving money for selling items. Cash payments, this can be when the business is paying their own bills, maybe they're paying their suppliers, or they're just paying municipal bills. Now, this is the structure of the cash book receipt. I want you guys to have a look at this. This is the structure of a cash book receipt. Now, on number one, this column is used to record the number of source document, duplicate receipt, duplicate cash invoice, or a cash register roll. Number two, the day on which the transaction took place is entered here. Number three, details the person whom the money was received from in the event of a contractual receipt. When cash is received for sales or services rendered, no reference needed to be made to the name of such customer or client, since there is no possibility of subsequent contractual recourse. So we will just enter the details of the person who is paying us here. Number five, this column is also known as the till column. Cash amounts that pass through the cash register will be recorded in this column first. Number six, which is the bank. The bank column is the main column on this journal. The VAT inclusive amount of the cash receipts transactions must be recorded in this column. At month end, total of this column will be posted to the debit side of a bank account in the general ledger. Now from 7, 8, 9, which is your output VAT, service rendered, and sales, these columns in between the main column and the sundry columns can differ from one business to another. These columns are created for the accounts credited with regular cash receipts transactions. Lump sum posting can then be made to the credit side of these accounts in the general ledger at month end. If a business is not a VAT vendor, then there will be no output VAT. Remember what is output VAT, guys. Remember, this is the VAT that the business is collecting on behalf of SARS. So we recognize it as revenue because we are collecting it on behalf of SARS. We are charging it to the customers. The customers are paying it into the business. So the input VAT is the one that is being charged on us by the suppliers. Now number 10, the amount entered into the account for the credit is entered into this column. Sundry amounts or account in the cash receipt journal are only used when there is no specific column for the account to be credited. Now, if we have a transaction and we cannot allocate it to any of these columns, we are going to use sundry accounts for that transaction. Then number 13, this column is used to record the value of trading inventory forfeited, which is at cost price, with every cash sale that has taken place. The total of this column will be debited to the cost sale at month end, and it will be credited to the trading inventory account. Now here we have a structure of a cash book payments. Number 1, obviously, is your document number. Number 2 is the day which the transaction took place. Number 3 is the name of the payee. Number 4, this column is only used when we make a payment to a creditor. Number 5, the bank column is the main column on this journal. VAT inclusive amount of cash payments transaction must be recorded in this column. At month end, the total of this column will be posted to the credit side of the bank account in the general ledger. Then from 6 until 7, which is your input VAT and your trading inventory, these columns between the main columns and the sundry columns can differ from one business to another, meaning that it's not a statutory rule that we must have input VAT as well as trading inventory. We can put anything there that we like to put, but for the sake of this example, we have decided to use the input VAT as well as the trading inventory. The sundry accounts works like any other sundry accounts. We use it for transactions that we cannot classify to any columns that we have here, so we will allocate that to sundry accounts. Then we have the structure of the petty cash journal. Number 1, it is the document. Number 2 is the day on which the transaction took place. Number 3 is the precise details of exactly what was purchased, to whom payment was made or entered here. Only when there is a possibility of recourse with a supplier should a name be mentioned here. So here we'll record the details of what we're doing. If we are paying someone from petty cash, we'll write their name here. If you use any petty cash amount, we'll write the details of that petty cash transactions on column 3. Number 4, this column is only used when we make payment to a creditor. This column will not be discussed in this, since transaction with debtors and creditors are only discussed later in the course. Number 5, it's petty cash. This is the amount. This is the main column of this journal. The VAT inclusive amount of the petty cash transaction must be recorded in this column at month end. Then we have postage and stationery as well as staff refreshments. This column will differ from business to business, and for the sake of this example, we chose to use the major ones that we will use petty cash money for. We normally use petty cash money for postage, stationery, and staff refreshments. Now, just like the cash payment, just like the cash book payments, we also have the input VAT. This is the VAT that is being charged on us for buying items that we are going to use, since we are the last user to use these items. We are not going to pass them to the customers. In this case, we are the ones who's going to use these items that we buy on petty cash. Sundry accounts, we use it for classifying transactions that we couldn't allocate to any of these columns. So quiz of the day, the last one, quiz of the day, quick and short. Question 4.4, we're saying that traditionally petty meant small, and this usually meant that payments for small items had to be entered into the petty cash journal. Nowadays, we find that some companies choose to keep larger amounts of petty cash journal, often thousands of rands, on their premises, despite the possible risk or despite the possible security risk of such practices. Now, your question today, it's very simple, guys. Your question is that, can you think of reasons why some businesses would want to keep such large amounts of petty cash on hand given these risks? List some of these ideas. So you are supposed to give us your ideas. Why do you think that some of these businesses, they still keep a lot of cash on hand as petty cash in their premises? Please just comment with your answer, then you are done. I will get back to all the answers and we will discuss it. Please leave your answer on the comments below. Comment with your answer, then we are done. And before we go, guys, I have a special message for you. Please, please, please stay at home. Don't go out unnecessary. Always